A day like today in the grain markets is much easier to take than last Friday. Today felt like the market did something to turn off the selling. But there's still a long ways to go before the markets prove a low has been established. Live cattle erased early losses, lean hogs were mixed, and cotton futures jumped right back on the rally train to start a new week.
Live from Maze's moderately maniacal Monday via Farm Journal broadcast, this is AgriTalk. This afternoon, we'll talk with Darren Frye from Water Street Solutions. Later, Cary Artac from ArtacAdvisory.com. And directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson, and now, here's the host of AgriTalk, Chip Flory.
All right, Davis. Hey, man, yeah, not a bad start to the week, dude.
Not at all. Not at all.
No. I think when I look at that corn market is where I want to be most impressed.
Yeah.
But wheat did a nice job moving off the lows. Soy complex did close on the plus side of unchanged. So lots of positives to take from it, including that we have touched 70 degrees just outside the bunker.
That is outstanding, sir. How do you like it?
Oh, there is legitimate warmth to the breeze when you walk out. It changed, of course, from this morning.
Yes.
But I walked out over the noon hour and it hit me, and I'm like, wait a minute.
Yeah.
What is going on here?
Yeah.
Just legitimately warm. Yeah.
You got the flaps open in the bunker?
I do.
Boy, me too.
Yep.
Me too.
Yeah, I can hear the breeze blowing out there and everything right now. Got the leaves blowing around out on the patio. It's springtime here in the bunker.
I love it. Very sunshiny and pleasant here in the city of Fountains today as well. Just a little warmer than y'all up there north, but we're right in there. We're in the ballpark.
Good.
Yeah.
Good. We got Darren Frye on the show today.
Yeah, we do.
We'll get some perspective on just what today means. You don't want to read too much into it.
Mm-hmm.
Today was a whole lot better than following through to the downside. But let's not get too excited about what is happening in the markets. Let's try to put some perspective on it and ease into this talk that the markets are trying to put in some kind of a what do you call it? Winter or spring low? I don't even know. Weather's got me that confused.
Yeah, it's a confusing time. Mm-hmm.
Yes. Let's get to the news.
May soft red winter wheat futures opened fractionally higher today, then dipped to test support at the 560 level. The market showed respect for that support, triggering a round of short covering and a rally to close near session highs. May hard red winter wheat futures posted an outside trading day with a mid-range open and a high-range close to set the stage for a short covering rally. Export inspections of wheat in the weekend of February 22nd totaled 482,000 metric tons. That was at the high end of trade expectations. Trade sources also indicate South Korea purchased nearly 86,000 metric tons of U.S. wheat over the weekend. July HRW wheat futures 8 1/2 cents higher, 566 1/2. July SRW wheat up 7 cents to 577. July spring wheat closed at 657 3/4, up 5 3/4 cents. So long, March contract. We're on to July. Chip?
We're on to the Julys. That's right. Some demand is sneaking back into the wheat market. I'm not saying that was enough to really get us a big rally in the wheat market today, but it sure didn't encourage selling. That was good.
Well, the weather trend in Argentina and in Mato Grosso, Brazil, is pointing to drier conditions in the 10-day outlook. With nearly 3/4 of the safrinha corn crop planted, traders are paying closer attention to the weather again, and the risk of increasing crop stress should limit selling interest. Inspections of corn for export in the weekend of February 22nd totaled 1.242 million metric tons. That topped trade expectations. May corn futures posted an outside trading day with a low-range open and a close near session highs. May corn futures 8 cents higher, 421 1/2. July corn up 7 1/2 at 433 3/4. December corn futures closed at 457. That's up 7 1/2 today, Chip.
Yeah. We're going to watch that safrinha corn crop weather now. I think that's going to be a focus for the market. It's got to be. It's got to be a focus for the market going forward.
AgRural cut its Brazilian bean crop estimate 2.4 million metric tons to 147.7 million metric tons. The consulting firm says the Brazilian bean crop is 40% harvested. That's ahead of last year at this time, when just 1/3 of the crop was harvested. Traders say the drier trend in the 10-day outlook for Mato Grosso and Mato Grosso do Sul helped to limit selling in grain and oilseed futures. Export inspections of beans in the weekend of February 22nd totaled 975,000 metric tons, in line with trade expectations. May beans spiked support at Friday's low before recovering to close fractionally above the opening range. May beans 3.5 cents higher today, 11.45 1/4. July up 4 cents, 11.55 1/4. November beans closed at 11.29 3/4. Chip, that one's down 0.5 cent today.
Yeah, some help from the product markets. May soybean meal today up 60 cents a ton, and May bean oil was up 42 points.
July cotton's off to a good start this week, up 106 points, 93.68. On your livestocks, live cattle futures opened solidly lower and then spent the rest of the day erasing losses to end with slight gains. April fat cattle 20 cents higher, all told 188.10. The June contract up 22.5 to 184.10. April feeder futures down 107 1/2 to 258.90. And on the snout side, April lean hogs gapped lower, firm to fill the gap, then fell back to post a mid-range close. April hogs 92.5 cents lower, 86.27 1/2. The June contract up 47 1/2 to 99.85. Chip.
All right. Thank you very much, Davis. Let's bring in Jack Scoville, Price Futures Group. Hey, Jack. How's it going?
It's going great. Beautiful day here in Chicago. I'm sure you're having one out there in Iowa, too.
Absolutely.
And, boy, it's hard to believe it's still the end of February, isn't it?
Yeah. Yeah, it certainly is. I saw guys putting anhydrous down yesterday. So it's
I can believe it.
Yeah. Things are moving ahead, no doubt. What'd you make of that comeback in the corn today? Looked pretty good.
Yeah, it did. It sure did. And, of course, that's been the most oversold of the market between the corn and the beans. The corn's really been taking it in the back end here for a long time. And to see it turn around, getting ready for deliveries was just showed how big the speculative selling has been, and how little interest there is on the part of producers of selling into this most recent sell-off. It's going to take more than just a 5 or 10 cent rally to get these guys interested in selling. So that was an interesting thing to find out as well.
Yeah, good point. I'm not exactly sure what's going to move more corn out of the bin, but first things first, right? First things is let's get the funds to stop selling, and today's the kind of day that at least can start that process, right?
Oh, absolutely. And we're shifting into a new month. March goes into delivery this week, and we're going to be dealing with May. And that should change the attitudes here a little bit. Now we're going to be focusing as much on Brazil, South America generally, as we are on what's going on here in the U.S. And the crops down there, at least the soybeans we know are in bad shape, and the corn, by the time we get to May, could be in equally in bad shape by dry conditions up north.
Yep. Good stuff, Jack. Thanks, buddy. We'll talk to you next week.
Okay, great.
All right, that's Jack Scoville, Price Futures Group. Coming up next, Darren Frye, Water Street Solutions, right here on AgriTalk.
The best talkers in ag, including you. Join the conversation on AgriTalk. Call us at 855-4-TALK-AG.
Welcome back to AgriTalk. I'm your host, Chip. Glad that you're with us on this Monday afternoon. Monday afternoon of Commodity Classic. So we, Big Apple Joe and I will be in Houston later this week. We'll be bringing you coverage, 5 shows coming to you from Commodity Classic this week. So looking forward to getting down there, having some conversations, talking with some of the leadership of the commodity groups, and checking out what the priorities are of those in attendance there at Commodity Classic. All right, Darren Frye, Water Street Solutions is our guest analyst today. Darren, welcome to AgriTalk, my friend. How are you?
Hey, thanks for having me. I'm doing great. It's been a while since we've talked, but what a great day out there. Hitting 70 degrees here in a lot of places in the Midwest.
Yeah. Yep. We've got the 70 right now. I got the window open. Every now and then a warm breeze blows in the bunker. It is pretty incredible. It's a Feb 26th that I'm going to remember. That is for sure. For sure. So.
Yeah, we're going to dip down here in a couple of days, but it's right back up. It looks like this warmth's upon us here for at least the next few weeks.
Yes, it does. So, okay. How excited should a guy get about today's action in the corn market?
You know, the corn market had a really good close. I mean, it's been beat up the most out of any of the markets, really getting the bearish sentiment to a high level. Just nobody has any hope of a rally, and concerned about not only old crop values that are left in the bin, but also new crop and opportunities there. But what we ended up having today was a couple key reversal patterns on the charts. If you look at the May contract, we had a bullish engulfing candle pattern on the Japanese candles. So that's a decent reversal pattern. It could mean that we have some ups here coming, but also on an open high-low close chart, we had a double key reversal outside bar combination. So a very strong day after being lower and then giving up on those sellers and turning the market around. It's a positive close. We need to see follow through, and we really need to see May corn get over critical resistance at 435. If it does that, maybe we have a bottom in place until later in summer.
Okay. The chart patterns or signals that you were just talking about, don't ignore those. Those have proven to be good indicators in the corn market in particular in the past, haven't they?
Yeah, they have. I mean, anytime you get either one of those or both of those in a daily close like this, you should see follow through to the upside. This should mean that the selling comes off the market some, and we should see short covering, maybe even some nibbling down here by people who need to buy some needs for their end users. And then, of course, we need to see follow through beyond just a day or two. We need to see the market really then start breaking critical resistance level. But this could be something you look back on a week or two from now and say, yeah, that was the low.
Yeah. And that's how long it will take. It wouldn't even surprise me if we break away from this low for a period of time, set back and test it again, and then lock in some kind of a low. But this was constructive. Should not be ignored. Now, if all of a sudden tomorrow we get a high volume day, blow right through today's low, close below it, then everything's off. You just
of course.
You negate anything bullish that happened in today's market. But this is the kind of thing for a long time, Darren, on the show. I've been I shouldn't say a long time, but 3 weeks. I've been asking what's going to get the funds to quit selling, and the answer that I was looking for a while and never really got it. So I thought, well, maybe I'm crazy, but I think the answer is losses on some of those short positions, the latest short positions that the funds have got. Once they start to lose a little bit of money on a new short, it's not nearly as much fun putting on another new short. And
that's right.
We may have gotten to the point that we can say this is the first signal that the funds are not as excited about selling as they were last week at this time.
Well, in addition, this is the shortest they've been on all time. We know their limits are greater, so they can sell more. And maybe they're going to wait for a 25-cent bounce and sell it back into the ground. I mean, that's possible. But I would say a catalyst in addition to that is the weather in South America is going to be important for this safrinha crop. And as they plant it at a record pace, really, because the beans are coming off at a pretty record pace. I think they're 75% done in Mato Grosso. And so if you take a look where the safrinha corn's grown, it's not only drier than 16, but the forecast is for warmer, drier weather coming. And if you remember that 15-16 year, that 16 safrinha crop was off about 20%, I think 22 to be exact. And we have a similar, dryness of the profile going in and a similar pattern with that being a very good analog here. So time will tell, but that could be the catalyst that really gets the funds nervous if a drought is going to reduce, 5, 10, 15 million metric tons of second crop corn down in Brazil. So it could get interesting here, and today's action could be just the start of that.
Yeah. And if it could actually turn into a little bit of additional demand for U.S. corn, woo, man, then then we can really get excited about this, huh?
No, that's right. One of the things that you and I have shared back and forth in emails is things might not be as bearish as they appear. And what I mean by that is, you look at the balance sheet on corn domestically here, it's at the high end of the ranges. We're 15% stocks to use. There's no shortages. We don't have anything to be excited about. But if you look at the world numbers, excluding China, taking China out, you just look at the world numbers, we're toward the low side of those numbers. And if you end up losing 5, 10, 15 million metric tons out of safrinha, which is possible, given the weather patterns down there, given where they're starting, then you're really tight on the world balance sheet. So that could certainly help us get some more demand as we enter this April, May, June timeframe before safrinha corn comes back online for the export side.
Yeah. Okay. I want to talk about the fundamentals that are in the market, and we're starting down that path with the supply side off the South American crop. But take me back to the annual ag outlook from USDA. Was there anything in the balance sheets that we got from the ag economist's office that made you scratch your head, made you think, yep, that's really smart? Was anything that caught your attention?
Not really. I mean, the numbers were pretty bearish across the board, and they typically are. But the way I look at the outlook for them, it's a good starting point. But they don't have the best history. Nobody does predicting what the outcome will be months and months ahead of the final harvest, right? And so, it's a good starting point, but hey, there's a lot of things that got to play out, and we don't know all those things when it filters into the demand or the supply side. So we'll see. It's kind of got the bearish things dialed in, and I think the biggest fundamental is the dollar has been fairly strong, and that has kept these funds in a deflationary mode. And the dollar's been strong enough. The Feds have held off on cutting interest rates now, probably till June, and this has allowed the funds to continue to press the pedal on the short side. And so I think if we see any change in the dollar or the Fed's position, that could be also something that really helps corn and soybeans and wheat out, because we know that anytime the dollar's strong, exportable goods, even energies, and we export a lot of crude now, that's going to be hard on us for that competitive market out there that we're trying to, compete with. So the dollar is a big deal, I think, Chip.
Interesting. Just with the impact that it's having on the fund's attitudes, that makes a lot of sense to me, Darren, and it's got me thinking about a couple of other things. As far as money flow goes, right now the dollar and the expectations around interest rates still got money flowing onto the equities, right?
Oh yeah.
Yeah.
I mean, the equity markets are strong and probably going to remain strong, and it's obvious now why that's happening. But I would say that that most of us, including myself, I wasn't bullish after last August in stocks, and then after they kept going, I had to turn back to the bullish side just because of some of these things that did not happen with the Feds. And the Fed sent kind of that signal that we're going to cut. And the bond market priced in like 5 or 6 rate cuts, for this year. It's not happening as the Feds once thought in December.
Right. Okay, we got to take a break. We're talking with Darren Frye, Water Street Solutions, here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes. Where July HRW wheat futures were 8 1/2 cents higher, 5.66 1/2. July SRW wheat up 7 cents to 5.77. May corn futures were 8 cents higher, 4.21 1/2. July corn up 7 1/2 to 4.33 3/4. Hey, there's the December contract, 4.57. That's up 7 1/2 today. May soybean futures 3 1/2 cents higher, 11.45 1/4. July beans up 4 cents, 11.55 1/4. July cotton 106 points higher today, 93.68. On the livestock side, April fat cattle were 20 cents higher at 188.10. April feeder futures down $1, 7 1/2 cents to 258.90. And April lean hog futures 92 1/2 lower all told at 86.27 1/2. Get more market news every market day. Try profarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. The truth is hard to come by these days, unless you listen to AgriTalk.
Welcome to AgriTalk. I'm your host, Chip. Glad that you are with us. We are in the middle of a conversation with Darren Frye, Water Street Solutions. We were talking a little bit about the balance sheets that we saw from USDA at the end of the last segment. Let's just go to the acreage numbers here, Darren. 91 million planted on corn. That would be down 3.6 million from a year ago. Then on soybeans, 87.5 would be up 3.9 million from a year ago. What's your thoughts on those?
Numbers for a starting point. What I'd like to see is what we do in the Mid-South, the Delta area, because we know cotton has come up in value. We know that rice has, as well as, a lot of people are looking at peanuts down there because of the return to their investment. And so I think you got some competitive crops that might take some acres down there. 1 million or 2 million acres could be absent from corn and soybean. And then, in states like North Dakota, for example, where we add acres sometimes when prices are right, we have things like navy beans, pinto beans, black beans, pink beans, things like that, peas, that can be a go-to in the case of how depressed prices are. And prices have come down in this insurance setting period in February to the point that maybe they've discouraged some corn and bean acres. We'll have to wait and see. But certainly the job of the market is to stimulate demand and reduce acres. Mm-hmm. And maybe we've done some of that with some competitive crops taking some of these acres away.
Okay. That 178.5 combined, that would be at USDA's numbers, the 91 corn, 87.5 soybeans, 178.5 combined. Very similar to what we had a year ago. I've been of the opinion that we would stick close to that, but corn would be closer to 92, soybeans closer to 86. You're making me think with some pretty logical stuff there, Darren, that maybe 178 isn't the number that we should be targeting. Maybe that number is a 177.
It could be. I'm not ready to go there. I kind of want to see what happens here as we get in further into March and we start April, because I do think the prices of cotton will have a lot to do with this. We've seen swings of 500,000, million, even 1.5 million acres in the Mid-South before. Obviously, that will rob corn acres. Rice and peanuts will rob bean acres. And if you take a look at what the demand is for those products and what the supply is, because balance sheets on rice and cotton here domestically are kind of middle to low end of the range, and they're both on the low end of the range on the world balance sheets. So we might get a few more acres that robs us down there. I think the people in North Dakota are just trying to figure out how they make corn and soybeans work compared to some of these specialty crops. And so we could see, a few 100,000 acres here or there get leaked out. So maybe 178.5 is high when it's all said and done. We'll have to see.
Yeah. Interesting. Interesting, because boy, we like to think that it matters, just how many acres are planted. And in reality, in the big picture, there are years where, yeah, it matters, but if it's a million plus minus on corn, that won't have that much of an impact. This year it has an impact, because if it does get to 92 and a half, it gets a whole lot easier to write a story that's priced negative right up to the middle of summer. But if we're sitting at 91, 90 and a half, something like that, all of a sudden it's not that easy to tell the negative story anymore, is it?
Well, no, especially like if Safrinha here over the next couple of months loses 10 million metric tons, we have a little bit smaller acreage. There's still a battle with the weather guys on when El Nino is going to move to La Nina. Obviously, the later it does it, the better our crop's going to be here in the U.S. in the northern hemisphere. But if it arrives a little earlier, and some people are forecasting that, then we could have problems with our growing season. Now, I'm not talking about a severe problem, but hey, there's a big difference between a 182 yield and a 174 yield, especially if demand is a little bit higher and acres have been cut 1 million acres. Right. That will matter.
Yes. Yeah. Okay. All right. The prices that we've got available right now, and I'm thinking about the new crop markets in particular, it does set the market up for some unexpected variables as we get into the spring. Oh, yes,
it sure does.
And I think that's what I hear you talking about is, low prices hurt. We gotta recognize that.
Yeah, low prices are hurting the U.S. farmer. They're killing the South American farmer. Now, we've had some really good years leading up to this, but this is not a good scenario if prices stay down. And I think that's the fear of the marketplace, is we're not going to get an opportunity to sell higher prices. Everything's so bearish, and there's just no hope, and it's very dark here ahead of the crack of dawn, let's say. But I do think that with the funds position, if we see the Feds come in here in June and cut interest rates, we see some macro things continue to improve as China does some stimulus. Acres are a little smaller, demand's a little bit better. Yeah, we're probably not going to get to $6 corn, but could we get back to $5.25 for new crop values? Absolutely. Maybe even higher than that. It'll just depend on all of these inputs and how they factor in. But certainly a guy's got to look for higher prices to sell, in my opinion.
Okay. So that brings up a couple of ideas. Number one, on new crop marketings, what kind of when you have a conversation with a grower right now talking about new crop marketings, what do you talk about?
Well, I think you have to wait until you get a rally. I think there's going to be a lot of resistance between 5 and 5.20. The farmer as normal, and I'm not, don't hear that as a negative, anybody listening to this, but we get so wore down. Think about it. We get so wore down, and we say things like, we ever get back to $4.80 or $5, I'm selling everything.
Yeah.
And usually what happens after that is something better. And so, yeah, you can sell everything at $4.85. I think resistance in new crop corns more in that 5.10 to 5.25 area. And then in new crop soybeans, that's going to be into that clear up to, $12.50 even. So could we see a $1.25 rally? Nobody can see it, but yeah, it can happen. And you need to be taking action there. But you should be looking for back-offs to make sure if things are changing, you protect your upside, because having everything sold out those levels might or might not be a good thing in the end, and therefore upside coverage might be necessary.
Right. That upside coverage, some don't like to do it because they feel like they're trying to fix a wrong, fix a mistake. But to me, it's just flexibility. You got to be willing to take a look at that, right?
You're absolutely right, Chip. I like that word, flexibility. I mean, there isn't many businesses out here where you can make a decision and then go undo it when the information changes that you made that previous decision on. And call options, upside buybacks, those allow for that. And I think back no longer than farther than 4 years ago, 2020, a lot of people sold all their corn and 21 corn for under 4.25, and then look what happened. And that refusal to buy that back cost a lot of people a lot of money, and things really changed. And when they change, you have to change with it. And right now it's bearish, 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 but at some point things could look a little bit more positive than they do today.
Okay. So the other thing that the thought that you triggered in my mind here is when it comes to looking forward to the next South American crop, the next Brazilian corn crop and Brazilian bean crop, my attitude for the last several years has been, whatever last year's acres were, it's add on to last year's acres. The expansion is going to continue. It's going to continue. Is it? Is it going to continue in this kind of an environment?
I would say, that trend is your friend, and it will probably continue over the next decades to come, right? But this year might be a little bit different as we come into their next growing season. I'm thinking one of the big differences could be if we flip. I mean, we talked a little bit about El Nino moving to La Nina in our growing season, but I don't think you have to look too far to find a lot of folks on the weather side that would say, hey, if we flip into full-blown La Nina again, that won't be great for Argentina and southern Brazil. And that's where the yield losses got us a couple years ago when southern Brazil was so bad. They need more rain down there, and they didn't get the rain they needed. And that's when that crop was off more than what even this year's crop being dry up north is off. So kind of what I'm thinking is, hey, maybe acres aren't as big down there next year, but maybe weather isn't as favorable next year. And we got to see how that transition from El Nino to La Nina happens, because that could be why corn at $5 isn't the thing to sell all of it. It could be that as we get into South American growing season, we see upwards of more like $5.50 to $6 because they have a problem. And I think we can't discount that.
Interesting. Boy, if we do make that transition and get some stressful conditions in, it'll be interesting to see who reacts first, whether it's speculative money in the market and getting onto the long side, or if it's going to be the importers that react first and get some coverage on with some U.S. corn and soybeans. Because it's, boy, you want to talk about learning to be patient. We learned it last year. Great stuff, Darren. Thank you so much, buddy.
Thank you.
You bet, Darren Frye. You bet.
It.
Water Street Solutions. All right, Cary Artac is next.
Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk.
Welcome back. A lot of good things to think about in that conversation with Darren Frye. Some stuff that's a little counter to things that we've been talking about on the show. Maybe things aren't quite as bearish as what we thought they were. Hey, take a look at this. And I enjoy those conversations.
Yeah, for sure.
I enjoy those. Yep. That was good. That was good. All right. Cary Artac. Artac Advisory joins us right now. How you doing, Cary? Oh, we need a little Cary. Oh, it's gonna work. Gonna work on getting Cary in here.
I'm gonna work on this real quick.
Yeah.
Oh,
okay.
There. Okay.
Yeah, that wasn't Cary. That was Big Apple Joe right there.
Joe. Sure
yeah.
was.
So, but we will get him in here in just a second, I'm sure.
Let's try again.
And get an update on
Here.
what's going on in the charts. Hey, Cary, what's up?
Hey, Chip, how's it going? I didn't hear any of that. I just came on, so I'm ready to go.
Oh, that's good. That's good. If you would like to get a 2-week free trial of Cary's daily service, go to artacadvisory.com. That's ARTAC advisory.com and get signed up. Cary, I think you were going to start us with May corn, right?
That's right. Yeah, I've been mentioning on your show now for a number of weeks since we broke 460 half back in early January that we've got a 412 and a quarter to 417 and a quarter area objective that we've been testing now. The May contract, we just rolled out of March to May. We put out a new low at 408 and three quarter just today, but we certainly closed right back above that 412 and a quarter to 417 and a quarter region. Unless we close the week below 412 and a quarter, this market, I think, there's a bottoming process that is occurring over the next 3 to 5 weeks. 447 half is expected, and we could, over the next month or two, rally up to 465 even. Now, both of those upper levels are channel structures that are dropping on a week-by-week basis, so they change a little bit every week. But at this point in time, 447 half, 3 to 5 week target, possibly, by the end of April, early May, we could see 465 even, where we could top out through the rest of spring into early summer. 465 even would be a significant upward pivot point as we move into summer trade. The summer rally could then play out, if you will, with a settlement above 465 even. Now for the downside, if we close below 412 and a quarter, that out just maintains the sort of continued heavy price erosive dynamic that we've seen play out now for many months. 388 half, then likely within 3 to 5 weeks, and over the next 2 to 3 months, 343 and a quarter. So 412 and a quarter to 417 and a quarter, meaningful base of support. We're testing it. We're above it. This market, the path of least resistance right now, as far as I can see, is upward, holding above 412 and a quarter. On to May soybeans. Once again, I mentioned in early January a long-term sell signal, a 3 to 5 month sell signal when we close below a 3-year channel bottom that's presently well above the market at 1268 and a quarter. We closed today at 1145 and a quarter, so we're well on our way to reaching our 3 to 5 month downside objective I've been outlining at 1090 even. In fact, once again, we rolled from the March to the May contract over the last few days, and 1247 and a quarter, 2 cents above present price levels in the May contract, is a meaningful ceiling of resistance for the May contract, below which that 1090 even 3 to 5 month objective, which we're a full 2 months into now, should be realized over the next 2 to 3 weeks. 1090 even long-term support, able to contain broader market soybean selling pressures through spring and even through the rest of the year, perhaps. Now, if we close today any day this week, I should say, above 1247 and a quarter, good low for the week. And over the next 2 to 3 weeks, we can rally up to 1190 half, where we can top out through the month of March. And it would be a settlement above 1190 half, where I would expect full recovery back to that 1268 and a quarter long-term resistance area over the following 3 to 5 weeks. But we are heavy into March below 1247 and a quarter, that 1090 even long-term target in reach now over the next few weeks. And finally, April feeder cattle, we rolled from March to April. I've also been mentioning how over the last couple of months, we have this 267.07 long-term target to the upside. We closed 258.90 today. 267.07 is that 28-year channel top that we tested in September. And once we tested it, we fell viciously back to the December low. We're in reach of it again now, 267.07. Over the next couple of weeks, we could test it, and it can contain buying through the rest of the year. If we close above 267.07, which I don't see this week, 281 even becomes our next 2 to 3 month target, where once again we find long-term resistance. Finally, to the downside, 245 even, if tested over the next few weeks, can contain selling through March, and above which 267.07 still remains a 3 to 5 week objective. If we close below 245 even, we've got a good high through spring. I would expect over the next 2 to 3 months to fall back to what is actually long-term support at 221 even. That is a 3-year channel bottom that actually contained the December lows and could once again contain selling into later year if tested. 221 even, a 2 to 3 month target if we close below 245 even, which is a scenario I'm not expecting this week. I expect to see 267.07 before we test 245 even. And I think that pretty much rounds it out, Chip.
Good stuff, Cary. A lot of targets out there to keep an eye on. So we appreciate that a bunch, buddy. We'll talk to you next week.
All right. Very good. Take care.
All right. Cary Artac, Artac Advisory. Man, some of those numbers that he's kicking out in feeder cattle, good grief, Davis.
Yeah.
Woo, man. Some big numbers to watch in there. That is for sure. And well, on the downside, when you start talking about 380 in corn, May corn, that's something to pay attention to as well. All right, National Weather Service 6 to 10 day outlook for March 3rd through the 7th. Is that, yeah, wow.
Yeah, that's us.
That's us.
We're there now, bro.
We've got above normal temperatures expected in the Corn Belt. The higher odds of above normal temperatures are to the east and northeast of the Corn Belt. And then above normal precipitation, the elevated odds of above normal precipitation right down the Mississippi River, Illinois, Iowa, Minnesota. So pay attention to that. Real quick on the 8 to 14 day, the above normal temperatures stick around from March 5th through the 11th. Hey, thanks for listening today. I'm going to be traveling tomorrow. Davis is going to talk land values with Doug Hensley and the economy with Dr. Vince Malenga tomorrow morning right here on AgriTalk. I'll talk to you next from Houston and Commodity Classic.